aggressive buyers in this candle, right? So these aggressive buyers were not rewarded, right? So I'm just going to write 37 for 114. That corresponds to this region, right? So we saw a lot of positive delta and a break below the level, right? We break below this level over here. So if I continue to drive price, if I continue to play price on, what we saw is we saw a second break below this level, right? So we saw a second break and I was comfortable to go short just over here, right? This was my short over here, right here. So I was comfortable to go short. Now, the reason I was comfortable to go short one more time, and I was trying to get basically a 1.5R risk reward. The reason why I was comfortable to go short is because I saw aggressive buyers failing to break above this level, right? We broke below this level. So as you know, when aggressive buyers fail, that means that passive sellers are in control, right? This is a supply area, right? This is why I took the short at 10 a.m. Eastern. Right, so sorry, 10:10 Eastern, right? So aggressive buyers fail, which shows you that there's sell limit orders resting in this region. So the lesson I took away from this, right? So as you can see, we had a quick bounce up and then eventually it would have stopped me out here. So what was perhaps wrong with this trade, not from an order flow perspective, but from a key level perspective? What could I have done to improve, right? What would the Twitter warriors tell me to do to improve here? So the lesson here is daily PO3. So take a look at where I shorted, right? So I attempted to short from this level. However, the daily opening price was all the way up here. So we're way below the daily opening candle, right? Sorry, the daily opening price. And so for those who trade ICT or just generally understand how the daily cycle works, the markets will move up to go down, right? So the markets will move up and down, and the manipulations, the high of the days, the high and low of the day will occur. So you don't want to be shorting when you're near the low of the day. Now, of course, there's an argument that I don't know where the low of the day is going to form, but the lower down you go below the daily opening price, the lower probability your short setups become. In fact, what happened, this was the low of the day, so I caught the low of the day and I shorted at the low of the day, which wasn't an optimal key level, right? The key level was valid, but it wasn't an A+ key level. And that is why I took the 0.4, 0.5R loss. And I'm happy to take that loss if I understand next time not to short below the daily opening price. Now the long. So the long came at probably 11:30, 11:26 Eastern. So this trade here was quite interesting. So if we just go to the charts now and we go back and kind of analyze what was going on, this was the trade itself, right? So what you'll find is we had to really patiently wait for this to play out, right? So here we are. So before I go and break this trade down, I want all the traders to understand that this key level was the same key level I planned at 9 a.m. Eastern. So we tap into this at 11 a.m. Eastern. So it's about a 2-hour wait, right? So this